A total subscription on the latest Treasury bills auction saw total subscription hit about 22.41 trillion naira, following the Central Bank of Nigeria's decision to hold interest rates. Average yield in the Treasury bills market declined by 129 basis points to 20.2% as limited interest persisted on the long end above 18%. Traders Access Bank expect investors to position strategically ahead of the upcoming bond auction. Emmanuel Orji, the Treasury team member at Access Bank, joins me now for a market update. Thank you so much for your time today, Emmanuel. It's been quite an eventful week, you would say, but I'd like you to just run us through some of the key highlights here.
Hi, Kenny. Thanks for having me. So I think this week has been an interesting week. Looking at for Monday, where we saw that new CPI data, making a huge surprise to the markets, printing at 24% handle. This was quite a shock, given that a lot of analysts forecasted that despite the rebasing, inflation should still be above 30%, and the 24% handle was quite a shock to the market. And after that after the CPI data, we had the NTB auction, and you could recall that we saw some significant decline, over close to 200 basis point decline in the 1-year rates. Subscription was also strong at that auction. Like you mentioned, we saw close to over 2 trillion worth of subscription at that auction. And the DMO just ended up just selling 770 billion, just showing you the reduced appetite for borrowing so far in the NTB space. And to close that this week, we have the MPC announcement where the committee maintained the NPR rates at 27.5, and signaling to the market that it seems that things have kind of stabilized and market is kind of expecting rate cuts as early as H2 of this year.
Quite an interesting week, like you rightly put it there. But I'd like to first jump on the issue of the sentiment in the T-bills auction there. We're seeing yet the decline from previous auctions, but how would you say the sentiments compare?
I think the sentiment is beginning to thin out. We saw that despite the rate closing at 18.43, secondary market activities has hovered around that same level. At the past auction, whenever the stop rate closes, like the previous one closed at 20.32%, and we saw that rally as low as 19%. But this doesn't seem to be rallying as much as the previous NTB auction. Obviously, given the levels that we're currently at, it seems that a lot of offshores are beginning to lose appetite at this level, but the local demand continues to persist, particularly from the PFAs and the asset management.
Now, let's look at the MPC outcome and the likely market response. Yes, we've seen the CBN hold all policy parameters yesterday. We also, like you rightly mentioned, the rebate CPI came in as well on Monday. I'd like you to speak on the likely impact it will have on the yield trajectory going forward.
Yeah, I think it just sets markets for downward declining yields. Given that last year, how markets spiked up and how the MPC were aggressive in hiking rates. Given the new inflation data, the MPC seemed to be comfortable with this inflation at this point. But nevertheless, it stated the fact that we still expect some inflationary pressures, particularly given the tariffs that we're seeing in the U.S. On their trade partners. So we most likely see the MPC maintain this even into the next MPC meeting. But nevertheless, as soon as H2, when the base effect starts to kick in inflation, and we'll further see a downward decline in inflation, we'll most likely start having that conversation of a possible cut in near term.
Yeah, and I'd like to get your outlook on the naira. That the central bank seems to be quite pleased at what the rate that we're seeing the naira trade right now with the US dollar. Yeah, I'd like you to speak to that and also the dynamics at play here.
Okay, so for the naira, we've seen improved activity this week, particularly driven by both local and offshore counterparty. Yesterday, we traded as low as 14.95, giving that improved supply to that market. So it seems to be, the naira seems to have stabilized at this point. The CBN isn't even doing as aggressive intervention in that space as they used to in the past. But nevertheless, we expect it to continue to maintain this level, giving sustained improved macro data across Nigeria.
Yeah, because liquidity is also another issue still in the market there, and I'd like to get your outlook, first your expectations and your outlook for liquidity down the line, and how would you rate the current liquidity management efforts of the central bank?
Yeah, so I think for the most part of this week, systemic liquidity has been in a repo of over 1 trillion. The major reason for that is the previous week we saw an OMO auction being conducted where the CBN mopped up 1.4 trillion from system liquidity. So that has hovered, as you know, made market tights for the most part of this week. But heading into next week, we should see some improvements in system liquidity. Today alone, we're expecting close to 300 billion worth of coupon payments coming in today. Next week, we also expect FAC allocation as well to be paid over 1 trillion to come to system liquidity next week. So that should sort of ease system liquidity pressures heading into next week.
Yeah, but then for the bond auction, how do you think investors are going to position for Monday?
So I think the auction is quite an interesting one because early today we saw the DMO release a new circular for the bond auction. So ideally, before this circular, market was expecting 3 maturities to be offered at Monday bond auction, which is the 2029s, the 2031s, and the 2035. But the DMO has surprised markets by just offering the 2029s and 2031s, removing the 2035 from the bond auction on Monday. So we'll just be seeing those 2 maturities. In terms of expectation, we expect rates to hover around 20% handle, given that market has rallied significantly from the previous bond auction.
All right, the Emmanuel expects rates to over the 20% under the Emmanuel Orji, a Treasury team member at Access Bank, talking about the fixed income and FX markets here in Nigeria.